Guys, welcome to Stock Talk with Mike. This is going to be a real quick video on Crowdstrike. They're the cloud-based endpoint cybersecurity company that just reported Q2 earnings and reported some great numbers, but the stock is under some pressure after hours on Tuesday. So I want to provide a little bit of coverage of that. I hold Crowdstrike in my growth portfolio as they're an incredibly high growth company with a lot of reoccurring revenue. I'm just going to play some reporter coverage that kind of highlights some of the top line numbers from the Crowdstrike earnings call.
There's adjusted EPS for the second quarter coming in at 11 cents. The street was estimating 8 cents, so a beat there. Also a beat on the top line. Revenue 337.7 million. The estimate was lower by about 15 million.
So they beat by almost 40% for EPS, and they beat a little bit on revenue as well from an analyst we're expecting by about 15 million. So a small beat there.
The full year 2022 forecast, so they're seeing adjusted EPS of 43 cents to 49 cents. Previously that was 35 to 41, and the estimate was for 39, so kind of in the middle there. This is a very high growth stock, and investors want to be rewarded for that. They want to see not only a beat but massive beat, so that could be what's going on. Also for the full year, they're seeing revenue of 1.39 billion to 1.41 billion. Previously they saw 1.35 to 1.37. Estimate was for 1.36. So there was a nice beat on their revenue raise there, but not necessarily on the EPS. Third quarter forecast, they're seeing adjusted EPS of 8 to 10 cents. The estimate is for 8.7 cents.
All right, so they actually raised guidance for the full year, and they came ahead as far as analyst expectations for next quarter and on the year for their earnings per share forecast as well. So honestly, is a beat and a forecast, raised guidance on both earnings per share and on revenue that came above analyst expectations, which are already high expectations for the year. But this is where a company like Crowdstrike is a bit of a victim of their own success. So it is down 4.59% at the end of after hours trading on Tuesday. But if you take a step back here, looking at the 5-year chart, it's been a phenomenal performer. Trading since they became public back in June of 2019, as low as around the $50 range, up to where it currently is at $281 a share, very close to the 52-week high, which is $289, which is about a 5x off the lows in 2019. So it's been an absolute phenomenal performer. And that often happens. You have companies like this that have been performing extremely well, and even with good earnings reports, sell off. And you know, part of that is just with this big run, it does not trade cheap. Look at the price to sales, 63 times. That's not earnings, sales. So extremely rich. This is definitely one of those companies that deserves a premium multiple as it's extremely high growth. Last quarter, that was over 70% revenue growth. We saw again from Crowdstrike, and they got that subscription, reoccurring revenue that analysts and investors just love, but that is rich anyway you dice it, even within the cloud software as a service area, it's even expensive. And the forward PE, I mean, just crazy. Anything in the 6 digits is, extremely high. And they have a forward PE currently of 395. So definitely a rich valuation. And, for me, my investing style, I don't shy away from companies with rich multiples. I'll often take a small position and then use big downward sell-offs or downward pressure to potentially buy more. But I don't shy away from owning quality companies just because of the rich valuation alone. It's part of the equation, but I usually will own these kind of companies, and I do own Crowdstrike. Just looking at some more data here, 13F filings, hedge funds buying and selling. Last quarter in Q2, we did see more hedge funds picking up Crowdstrike as well. It is a popular stock. It's in the top 10 of 31 funds, up from the previous quarter of 29. Funds holding now is 915 funds, and institutional ownership is over 70%. A lot of big money in Crowdstrike. Last quarter, new position and increased positions, you see 163 and 380 respectively. That's up from the previous quarter, so there's been acceleration of institutional ownership here. And then closed positions and reduced positions is lower than the new and increased. I like to see that. I like to see a net accumulation by hedge funds, and money managers. So that's a really good bullish sign for CrowdStrike. But again, you got to take that for a grain of salt because these are always backwards looking. A lot of these funds could have sold out by now, and we won't have that data until a few months from now. All right, just looking at analysts' price target for CrowdStrike. So currently the share price at 281, the average analyst price target, 20 analysts covering it, is $289.10, despite the fact that it's a strong buy rating with 19 buys and 1 hold. So what this means to me is analysts set these pie in the sky high price targets, and because CrowdStrike's been on this run, even though they think it's a great stock to buy, it's already kind of met those levels. So that's not a lot of upside from these levels, even though they say it's a strong buy. That only represents 2.88% upside from here. But I think you're going to see some re-ratings of the stock. Be interesting to see if there's some revisions of these analyst estimates tomorrow after this release of this earning report. So stay tuned for that. As for me, as I mentioned, I do hold CrowdStrike, and I have done some trimming, mostly because of that valuation. So I do hold it in my growth portfolio. It's the 10th largest position, I think, in my growth portfolio, probably my 11th or 12th largest position overall in all my investment accounts. And I originally started buying CrowdStrike back in 2019, shortly after they came public, in the $55 a share range. And then again, later in the year at $53.80, I picked up some shares. And I actually had picked up more shares than obviously 2 and 8, but at the time, 2 shares at $55 is only $110 worth. And I don't generally take positions anywhere near that small. But the reason why I show such a small number is because I have trimmed some of that position after it's gone on a big run. But those initial positions are up over 400%. So been an extremely good performer for me. And I did buy back some shares as we saw some downward pressure in a lot of these growth stocks back in March. I picked up 8 more shares at $197 a share. And that's where tech and growth stocks were so out of favor. And like a lot of these companies, I've had some really good performance in my buys from earlier this year where I really took advantage of those sell-offs. And those shares are up 42% just since March. So done really well for me. But I'm happy with this weighting with CrowdStrike, even though I really like CrowdStrike. I like that they're in cloud, that they're the forefront of endpoint cybersecurity. I think cybersecurity is an area you should have exposure to in your portfolio, at least my opinion. And I'm playing that with CrowdStrike. Just everything I read, it's my highest conviction cybersecurity company. I'm not going to go seek out some cybersecurity company that isn't performing as well, isn't acquiring customers as quickly just because it trades cheaper. I might do something like that for a trade, but not for a long-term investment. That's just not my style. So I really like CrowdStrike, but I'm keeping it down here, weighted a little smaller in my portfolio, kind of bottom, middle of the pack in my growth portfolio, basically just because the big run it's been on and the valuation it currently trades at. But definitely one to maybe consider putting on your watch list if we see some market pressure in the future. And one I would be looking to add to if we saw a significant sell-off. But I'm not sure we're going to see that anytime soon with CrowdStrike. And that's the problem with waiting for these companies to come in. So my strategy often is when I develop strong conviction for a company through my research, I'll limp in with an initial small position, regardless of the valuation. If I like the other underlying fundamentals of the company as far as where I see the company going over the next 5 years. And if we see downward pressure, I'll add to that position and lower my cost basis. But I don't like seeing a company that I want to be a part of and invest in for the long term continue to run while I sit on the sidelines. So that's my strategy. So that's what I have for you today. Again, I think it was a really good report for CrowdStrike. It's just they're a victim of their own success, been on a big run lately and trading expensive. So thank you so much for watching. Happy investing.